An order block is supposed to be a wall. Price hits it and turns away. But some walls don't hold, and what they become after they break is more useful than the wall ever was. Today we read one full cycle of an order block that gets respected, then violated, then flips sides completely. The chart opens with a rally into a higher high. The candle cluster at that high becomes the order block, the pink zone marked across the chart. It's the last burst of buying before a decisive bearish candle takes over. At this point, it's an ordinary supply zone. Nothing yet says it will ever be anything else. Price reject from the zone, and the markdown begins. Wide bearish bodies, lower, highs on every weak bounce, structure rolling cleanly into a downtrend. This first rejection matters, because a breaker block only means something if the zone was genuinely respected first. A level price ignores from the start was never an order block. This zone earned its status here. The markdown bottoms at a lower low, and now the volume panel earns its place. The low prints on a clear volume spike, one of the largest bars in the face. That spike is the signature of capitulation, panic selling absorbed by buyers stepping in at the lows. A low on heavy volume is where inventory change hands. A low on light volume is just a pause. This is the heavy kind. After the flush, a base builds. The structure shifts from clean downtrend to choppy sideways, higher, lows and lower, highs alternating with no decisive direction. Volume goes moderate and mixed, the signature of equilibrium. This is the accumulation phase, quiet and slow. It isn't the trade, and it isn't a signal yet. It's preparation, a floor forming while buyers quietly build position. The base resolves upward, and the recovery begins, grinding higher through higher, highs and higher, lows back toward the order block that caused the original rejection. This sets up the central question. When price returns to a real supply zone, either it rejects again or it closes through. Most traders taught that order blocks are strong levels, positioned for the rejection automatically. That assumption is exactly what the next phase exploits. Price returns to the order block, the same zone that rejected it at the start. This is the moment of decision, and the character of the approach is the first clue. These candles are bullish-bodied, closing near their highs, real buying pressure behind the move. A weak approach with long upper wicks would telegraph another rejection. A strong approach like this one telegraphs intent to break through. Price closes decisively through the order block. Not a wick through, not a brief poke that closes back inside, a full-bodied close above the zone that holds. This is the violation, the single most important event on the chart. The break comes on expanding volume, the sound of the sellers who own the zone being overwhelmed. Their stops, placed just above the level they were defending, trigger as by orders and add fuel to the break. After the break, price pulls back to the zone, but now from above. The retest meets the old order block and holds as support. Higher lows cluster right on the line, refusing to close back below it. And here the volume is the key. The retest holds on noticeably lighter volume than the break. That contraction is the proof there's no supply left to defend the zone. The silence is the signal. Supply has become demand. From that retest, the markup launches. The move up is decisive, and volume expands again, this time on the upside, confirming buying drives the new trend. Quiet on the hold, loud on the launch. Behind the strength is the trapped supply from the original zone. The sellers who shorted it twice are now offside, and their stops trigger as by orders stacking on top of genuine buying. That's why breaker markups tend to be impulsive rather than gradual. The markup carries price to new highs, well above the zone, completing the roll flip. The level that began the chart as supply, that produced a textbook rejection and a full markdown, has become a launch pad for a move to new highs. New highs are the proof the violation was real and not a temporary overshoot. The order block didn't fail. It changed sides. 3 things to carry from this chart. A violated order block isn't a failed level. It's a level that changed sides. The same volume signal means opposite things depending on where it fires. Heavy on a rejection, confirmed supply. Heavy on a break, confirmed supply is gone. And the cleanest part of the move often comes after the level breaks, not before. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.